Okay, so you guys have sent in some really interesting sources about Warren Buffett and Berkshire Hathaway.
Yeah, it's always fascinating to see what the Oracle of Omaha is up to.
Right, especially, given the market doing what it's doing lately.
Oh, for sure.
Our mission today is to really dig into these sources, all about Berkshire Hathaway's recent investment activity, and try to extract the most important takeaways for you.
Exactly. And I think what really jumps out at you initially is this sort of contradiction.
Right.
On the one hand, for the past couple of years, the narrative has been that Berkshire's been selling off a lot of stock.
Yes, we're talking over $143 billion worth in just the last year.
Yeah.
Unloading positions in Apple and Bank of America, pretty big names.
Mm-hmm.
It kind of painted this picture of Buffett being super cautious and just hoarding cash.
Which, in a way, he was,
Yeah.
a large portion of that went to taxes and, yes, increasing their cash reserves.
Right.
But I think it's important to remember something that Buffett himself emphasized in his shareholder letter. And I think it's a great quote that really frames his thinking. He said, Berkshire will never prefer ownership of cash equivalent assets over the ownership of good businesses, whether controlled or only partially owned.
So let's unpack that a bit.
Sure.
Even with all that selling, Buffett wasn't just sitting on his hands waiting for a market crash.
Right.
Your sources point out that in Q4 of last year, Berkshire actually put around $2.6 billion into 6 different publicly traded companies.
It's a pretty notable deployment of capital, even if it's small compared to, their usual mega deals.
Right, right. And it's fascinating to see where he's putting that money.
Mm-hmm.
So the companies are Occidental Petroleum, VeriSign, SiriusXM, Pool Corp, Domino's Pizza, and Constellation Brands.
That is the list, yes.
Now, a few of those names ring a bell in terms of past holdings for Berkshire.
Yeah.
Occidental, SiriusXM, VeriSign, those weren't exactly new to the portfolio, were they?
That's right. Those investments just represent increases to existing stakes, substantial stakes. But the other 3, Pool Corp, Domino's Pizza, and Constellation Brands, those appear to be new bets, at least in a more meaningful way.
Okay.
And the estimated amounts actually give us even more of a clue. I think Occidental received the biggest slice at $409.1 million, followed by Constellation Brands at a hefty $1.3 billion.
Wow.
Domino's around $470 million, SiriusXM at $296.8 million, VeriSign at $89.9 million, and Pool Corp estimated at about $70 million.
What really stood out to me looking at this list is the size of these companies.
Yeah.
Your source highlights that none of them have particularly massive market caps.
Right.
Occidental, the largest of the group, had a market cap of around $43.7 billion at the time this article was written.
Cool.
And SiriusXM was down around $7.7 billion.
Much smaller.
Yeah, that's a different ballpark altogether compared to the massive $100 billion plus companies that Berkshire typically invests in.
That is a key observation, and I think it underscores this challenge that Buffett faces.
Yeah.
As he pointed out in his 2023 shareholder letter, there remain only a handful of companies in this country capable of truly moving the needle at Berkshire, given their enormous investable assets,
Right.
which are now over $600 billion.
It's hard to make a dent in that with a small investment.
He went on to say if they can find such companies, they have to be attractively priced.
So it sounds like for Berkshire to really make a significant impact, they're hunting for these rare giant opportunities that also happen to be undervalued.
Precisely. And these don't come around every day.
No.
And this, I think, highlights a significant advantage that individual investors like you listening have.
Right.
You're not managing hundreds of billions of dollars.
Not fully, no.
So investing in smaller and mid-cap companies can actually have a much more noticeable impact on your portfolio returns.
Right.
These 6 companies that Buffett picked, while maybe not game changers for Berkshire's overall performance, could be very interesting opportunities for individual investors looking for value.
Absolutely. And of these 6 companies, your source specifically calls out one as potentially the most compelling value right now.
They do.
Which one caught their eye?
That would be Constellation Brands.
Constellation Brands.
The article suggests that while all 6 appear to offer appealing value and possess strong competitive advantages.
Right. Classic Buffett criteria.
Yeah, classic Buffett. But Constellation seems to present the most compelling case at this particular moment.
All right, let's zero in on Constellation Brands then.
Okay.
For anyone listening who might not be immediately familiar, what exactly is their main business?
So Constellation Brands is primarily known as the leading brewer of Mexican beers in the United States.
Okay.
Their brands like Corona and Modelo hold a dominant position in the U.S. market for Mexican lagers.
Right.
Well, they do have a wine and spirits segment as well.
Okay.
The beer business is really the engine of the company, accounting for over 80% of their sales and operating income.
Gotcha.
So when we talk about Constellation Brands, we're mainly talking about beer.
So they're essentially riding the wave of the huge popularity of these Mexican beer brands in the U.S. market.
They are?
But the article also touches on some potential headwinds facing the broader alcohol industry as a whole.
Right.
What are some of those concerns that might make investors a bit nervous?
Yeah, so there are a few factors on the horizon. The U.S. Surgeon General has proposed putting health warning labels on all alcoholic beverages,
Okay.
which could potentially dampen overall consumption.
Sure.
We're also seeing a trend of younger generations, Gen Z in particular, tending to consume less alcohol compared to previous generations the same age.
Interesting.
And specifically for beer, it's facing increased competition from the rapidly growing popularity of ready-to-drink cocktails and other alternative beverages.
Yeah, that seltzer craze.
Exactly, hard seltzers, all that.
So those definitely sound like factors that could make investors think twice.
For sure.
So why does the article still highlight Constellation as a compelling value despite these potential challenges in the broader industry?
Well, despite those headwinds, Constellation's core beer business has demonstrated remarkable resilience and consistent growth.
Okay.
For the fiscal year that just ended in February, they were forecasting a solid 4% to 7% sales growth, specifically for their beer segment.
Okay.
Furthermore, they anticipate their operating profit margins will continue to expand.
Right.
And a key driver of this is their premiumization strategy.
Premiumization strategy. Okay, let's dig into that. What exactly does that involve?
Yeah, so essentially it means they are actively focusing on positioning their key beer brands as more premium, higher-end options within the market.
Okay.
They want consumers to perceive brands like Corona and Modelo as being worth a slightly higher price.
Gotcha. So like a premium brand.
Exactly.
Okay.
Their significant scale gives them a huge advantage in this.
Now so.
Because it allows them to invest substantially more in advertising and marketing compared to their competitors in the Mexican brewing space.
Right.
This creates a positive cycle. Strong advertising reinforces their premium brand image, which allows them to maintain that premium pricing and their dominant market share.
That makes a lot of sense. They're leveraging their size and brand recognition to solidify their position
Exactly.
at the higher end of the market.
Mm-hmm.
Now, the timing of Buffett's purchase is quite interesting, isn't it?
It is.
The article points out that he bought these shares before Constellation actually released some rather disappointing earnings figures.
That's a really crucial point to understand.
Yeah.
Constellation's third quarter earnings report was indeed weaker than expected.
Really?
They saw a significant 14% drop in sales within their wine and spirits division.
Wow.
And that decline essentially offset the growth they were still experiencing in the beer business.
Okay.
As a direct result, the company's management actually lowered their overall financial outlook for the full year.
Ouch. That kind of news usually sends a stock price tumbling.
Yeah, it often does, and Constellation's stock price did take a hit following that earnings announcement.
Yeah.
On top of that, the article also brings up another potential headwind, the new 25% tariff on goods imported from Mexico.
Right.
Given that their core beer business relies heavily on imports from Mexico, this new tariff could certainly put pressure on their sales and, importantly, their profit margins.
So to recap, we've got potentially declining sales in their wine and spirits segment.
Yeah.
A downward revision of their financial outlook and this new significant tariff.
Right.
With all those challenges swirling around, why is Constellation still being singled out as potentially the best of the bunch among Buffett's recent picks?
Yeah, so the article's argument really hinges on the underlying strength and the long-term prospects of their core beer business.
Okay.
Even when you factor in the difficulties in the wine and spirits segment and the potential impact of the new tariff, their flagship beer brands, Corona and Modelo, continue to hold a very strong position in the market.
Sure.
And crucially are still growing. And the drop in the share price that followed the disappointing earnings actually made the valuation of the company much more attractive.
Gotcha.
At the time this article was written, the stock was trading at a price-to-forward earnings ratio of just 12.4,
Okay.
which in the context of the overall market and for a dominant player like Constellation in a resilient segment looked quite appealing.
So the argument is that the market may have overreacted to these more short-term headwinds.
Potentially, yeah.
And the core, highly profitable beer business is now being undervalued as a result.
Right. And that definitely sounds like the kind of value proposition that Warren Buffett often looks for.
Yeah, a strong underlying business facing temporary challenges.
Exactly. Despite the recent bumps in the road, the fundamental strength and durable competitive advantages of Constellation's beer business, combined with a now more appealing valuation after the stock price adjustment, are likely what made it an attractive investment for Berkshire Hathaway.
So he's betting on the long-term dominance of those beer brands.
I think so.
So to bring it all together, while Buffett made several interesting, though relatively smaller, for Berkshire investments in the last quarter,
Right.
Constellation Brands, that powerhouse in Mexican beer here in the U.S., really stands out as a particularly compelling value play.
Yeah.
Even when you consider some of the current challenges, both in the broader alcohol market and within their own wine and spirits division.
That's a very accurate summary.
Yeah.
The article really paints it as a classic Buffett move,
Yeah.
identifying a fundamentally sound business with a significant and lasting competitive advantage that's trading at what appears to be a reasonable price, even if there are some short-term concerns or negative news impacting the stock.
It really underscores that even when Buffett's overall strategy seems to be leaning towards holding more cash, there are still specific pockets of value that he's willing to invest in.
Absolutely.
And for individual investors like you, keeping an eye on these moves, even the smaller ones, can spark some really interesting ideas for your own portfolio.
I totally agree. It's a good reminder to look beyond the broad market narratives and really focus on the individual companies, their underlying fundamentals, and their long-term prospects.
So considering Buffett's consistent focus on long-term value, even when there are short-term market fluctuations and industry headwinds,
Yeah.
what other seemingly challenged but fundamentally strong businesses might be out there presenting similar opportunities for individual investors right now?
It's a great question.
It definitely gives you something to think about. Thanks for taking that deep dive with us.
My pleasure.
All right, we'll see you next time.